All right, let's get right into it. If you've ever driven around Dubai, you've definitely used Salik. But have you ever thought about actually owning a piece of that system? Well, today, that's exactly what we're going to break down. The investment case for Salik, the company with an absolute monopoly on Dubai's toll roads.
So here's the game plan for this explainer. We're going to start by figuring out what Salik really is, this idea of a digital landlord. Then we'll talk numbers, the price of that monopoly. After that, we'll stack up the good versus the bad, the reasons to invest against the biggest risks, and finally, we'll wrap it all up with a final verdict.
So first things first, let's really understand the core business here. What exactly is Salik?
I want to start with a number that honestly tells you almost everything you need to know, 49. That is the number of years Salik has the exclusive, guaranteed right to operate toll gates in Dubai. Think about that. This isn't just some business, it's a government-backed monopoly locked in until 2071.
So on paper, Salik is the exclusive toll operator that was spun out of Dubai's Roads and Transport Authority, the RTA. It runs all 8 of those major toll gates you see on the city's main highways. And it does it with that completely automated tag-based system. The key thing to remember is that this is an essential, can't-live-without-it piece of Dubai's entire infrastructure.
You know, the best way to wrap your head around it is to think of Salik as a kind of digital landlord. It essentially owns the most valuable digital real estate on Dubai's highways, and every single car that passes through pays a tiny, automatic bit of rent. It's an incredibly simple, predictable, and, well, a beautifully scalable model.
Okay, so we've established it's a fantastic monopoly. But what's the price tag for that kind of privilege? Now let's get into the financials and see what investors are actually paying for a slice of this.
Last year, the company brought in about 2.1 billion dirhams in revenue. But here's the really wild part. More than half of that, a whopping 1.1 billion dirhams, was pure profit. This is anything but a low-margin business.
And this number right here explains why. An EBITDA margin of around 70%. I mean, that's just incredible. Because the whole system is automated and doesn't require a lot of physical assets, the costs are super low. Once the gates are up, a massive chunk of every dirham collected goes straight to the bottom line.
But, and this is a big but, that kind of quality doesn't come cheap. The stock trades at a forward price-to-earnings ratio of about 30. That's what we call a premium valuation. So the multi-billion-dollar question for any investor is it actually worth paying that much?
Let's try to put that into perspective. If you compare it to another regional giant, say Adiyanok Distribution, Salik's PE of 30 is double Adiyanok's 15. So what's the trade-off? Well, Adiyanok will pay you a much higher dividend, somewhere around 5 to 6%, while Salik is closer to 2.6%. So you're basically choosing, do you want higher income now with Adiyanok, or are you willing to pay a premium for Salik's stability?
So how is Salik going to grow and justify that premium price tag? Well, it's not just sitting back and collecting tolls. The growth story comes from a few places. A new dynamic pricing system for peak and off-peak hours, 2 brand new gates coming soon, the potential to expand into other services like parking, and of course, just riding the wave of Dubai's constant expansion, which means more traffic.
Okay, so let's really build the case for this investment. Why on earth are people willing to pay that premium? Let's break down the core merits.
Now, what's really powerful here is how all these points feed into each other. You start with that 49-year monopoly, zero competition. That naturally leads to super high cash flow and demand that's completely predictable because it's tied to Dubai's economy. The company also has a rock-solid investment-grade balance sheet, those clear growth drivers we just talked about, and it's all backed by the government. It's like a financial fortress.
But you know, no investment is a sure thing. To be smart about this, we absolutely have to look at the other side of the coin. Let's dig into the case against Salik.
So what's the catch, right? It all sounds a little too good. And every investment thesis has a few potential weak spots. And here are the main ones for Salik. First, its income is totally dependent on traffic. A big economic slump or a massive permanent shift to remote work could hit their numbers. Second, all its eggs are in one basket, Dubai. Third, their policy is to pay out 100% of their profits as dividends. That's great for income, but it means zero cash is left over to reinvest in new projects. And finally, at the end of the day, the RTA holds the cards on pricing and new gates.
Now, with all that said, there's a pretty strong safety net here. Historically, Dubai's traffic has been incredibly resilient, even during downturns.
The new dynamic pricing can actually help smooth out revenues, and, that strong government backing, it provides a level of certainty that you just don't get with most companies. It's a huge mitigator.
All right, we've looked at the business, the price, the pros, and the cons. It's time to put it all together and land on a final verdict.
The final recommendation here is a hold. Look, this is not a stock that's going to make you rich overnight. It's really for a specific kind of investor. Someone who's looking for steady, predictable income and wants to lower the overall volatility in their portfolio. The quality and visibility of its earnings justify the price, but you have to see it as a stable anchor, not a speedboat.
And that really brings us back to that comparison we made earlier. You have to ask yourself, which investor are you? If your number one priority is higher dividend income and you're okay with a business that moves more with the economic cycle, then ad-hoc distribution might be for you. But if you value stability and protecting your capital above everything else, then Salik makes a very, very compelling argument.
So we end on the question that is really at the heart of this entire analysis. Is that near certain predictability that Salik offers actually worth paying the premium price? Well, that's the decision every single potential investor needs to make for themselves.